Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along and see it's true, but the world is pretty cold.
You're my boy, Blue!
What's going on, YouTube? It's your boy Blue here, and today I'm coming at you with a video to show you all how to use support and resistance as a way to trade off of. Now, every morning, usually on the weekends, I go through and I mark up my weeklies and my daily calendars or my daily charts so that once Monday comes, I can have all of that stuff already done. And every morning, I just do my daily support and resistance, and I go in and do my intraday support and resistance from pre-market, just basically marking up my pre-market highs and lows because I trade mostly off of those. My setups are off of those, but I do use my supports and resistance. Now, some of y'all may not know what the support and resistance are when it comes to charts, but support and resistance is when you look at a chart like you're looking at this Netflix chart, and it's to the same area of a chart that where the chart, like say it's going up and it continues to go up and it's coming down. Well, a area where it has a problem getting through, like say where this line is right here. This candle couldn't come up and go through it. This red candle didn't even try to push through it. It comes down and then it comes right back up and hits his head on the same area again and comes back down. That would be considered resistance. Support is when the stock comes down and it can't go any lower. So like down here, this would be considered a support area where you got this candle right here, couldn't break through it to come down and continue down. And the same thing with this red candle. Both of them had problems with this 236.64 area. Sometimes they'll go through but they'll come right back up and they can't make it no further through. So use it as support and resistance. Now, this is used, you have old support or old resistance, like this old resistance will become a new support for once it's broken. Like this whole area, I'm gonna put the mark on it. This area right here it goes up, and like this candle couldn't break through it. This candle didn't even come back down and try to test it. And once it does break through, most of the time it comes back up and it'll test that area and it can't get back down through it. But once it broke it again, see all these candles didn't come right back down through it, but it got touched on this candle and this candle. This is weekly, so this is my weekly chart anyways, but I use this as a way to mark up support and resistance from the previous week. So usually I go in, this last candle is last week's price action for the whole week. So I'll take that whole week and I'll mark up, have two lines on my chart, and I'll look to see what the high was on this candle and the low was on this candle. So the high on this candle is 360 even. So then I'll go in and I'll mark it up as 360. You can drag it to 360, but I prefer to do it this way. And then the low on the candle is 338. If you all can see it in that little box, it say 338 low. So the low on that candle is 338. So I'll go in and I'll mark it up 338. And it'll automatically go to that area. And I usually take and color code each one. I make this bluish color, so I know that that's my weekly. And then I'll look to see if it's an area like this area where it's actually at the low is actually some support area. You see how these candles was bouncing off through it. This candle got sucked back up through it and held it. This candle opened right here, popped all the way up, but it couldn't stay up there and came back and before it continued down. So this is like a major support area now since it's over it. So you will look for it to either hold or come through it and come back up. So you can use this as like the weekly support. Then I go in and I do my daily support. Now, if you back off of it, off the chart, I usually go in and do my previous day. So this green candle right here was Fridays. So I'll do the same thing that I did with the weekly as far as marking up, seeing what's the high and the low, and I'll mark it up. Then I'll come and see, okay, we got a gap fill right here. A gap fill is when a stock is moving, say, you see this red candle right here. This is one day of trading, and when once the market closed, it sold off while the market was closing because only certain people can trade the market while it's closed. And when it opened back up, it ended up down here. Why does hand keep coming up? I don't want to drag it nowhere. But it opened up down here. And that's considered the gap. And usually whenever a stock gaps, at some point it'll come back and fill that gap, which means that it'll have price action that'll come up, and this will become like some resistance for the stock to push up and then reject off of it. So you can mark that up as an area to watch for when it comes to trading intraday. I usually use those as my intradays as red, not the one that I mark up as my previous day. I use a different color so that I can move it every day, change it every day. But so you look at that as some resistance. So then you have down here, it failed to get through here, through this area of the chart, because you have this candle, and this candle, all supporting off of that area, and you can use that as support. So I'll mark that up as some support, and I'll use that as red too. Sometimes I was using green, but I changed it because I didn't want to get all confused. I just know it's daily support and resistance. And okay, this thing is playing with me. But so you will look at the daily, and you will find areas where you have support and resistance, like these candles all supported off of this. If I put a line right here, you will have these candles bounced off of this area. This candle pushed up to this area and rejected. These candles bounced off of this area. This candle pushed up to this area and rejected. These pushed up. You see how the resistance became support, and then once it actually gapped through it and became resistance. So once it came back up, it tested it right here and couldn't get through, and it fell apart. So that's what you look for on your charts to find support and resistance area where you have multiple days or even intraday time frames that either bounced off or hit their head, support resistance areas. So you can use them. So since the way I use them is, since my days, like the next day is going to be around this price action, I look for within like a smaller frame of time to see if I find support and resistance in the area that we can use to play off of. So for today, those are the lines that I'm going to use as my support and resistance. This line I can actually color as resistance because we got a good chance it can make it up here this week too. So I got to look at that as some resistance too. Then I'll mark up my previous days, my previous day high and low, which 348 is the high and 338 is the low on this candle. Wow, that's crazy how the weekly and the daily is matching up like that, running right into whole numbers. So usually I put two lines in, color them, and I usually use the purple, the magenta, and I'll check to see what my high is, which we already said is 348, and the low is 338. So then I'll go into them. And they went to the spots. Now, these moving averages, I will talk about them next week on my videos, but you use daily moving averages and intraday moving averages as support too. I know it's a lot, but this is the way you try to play. You got to play the price action, and these areas becomes important to price action when you're trading during the day. So now I go down to my 5-minute chart, and you can also use that same thing as looking for support and resistance for previous days on that too. And I don't really do it. And the way I use it is, say it's right here, like how this area, when the market had problems right here and it comes down and comes down, when it comes back up, I may use this area or as like a area that it may run into because it bounced off of here and it hit his head coming up on it. So I would use this area as a way to play if I'm trading. If it's coming up and it comes up to that line, then and I'm in a trade, I'll take some profits there because you never know if it's going to make it through this area. Say it made it up here earlier. I wouldn't have known if it was going to make it through the area, and it also hit it right here, which we call a double top from the previous day. So I would have took some profits and let the rest go. If it would have took me out, if it would have made it over, then you would continue to make money. If it didn't come through it, you can take the rest of your trade off. You can also trade off of it. You say you're looking at it and you say it's a double top and it hits its head twice. Say it got up here earlier and it double top, and you can short right here, and you can use this as your risk management. So if it breaks through it, you can take your trade off for the loss, but you can take it for a smaller loss since you know where you want to get out. You always want to know when you get in a stock where you want to get in, where you want to get out. If it goes goes against you, or if it goes your way. So if I got in, say down here, and I was using this as my support, and I said, okay, it comes down, breaks through this. If it comes down and breaks through this, and it holds, then I'll take the trade off. But if it goes up, I'll take the trade off for a loss down here. But if it goes up and hits its head on this, I'll take some profits and I'll leave some on to continue. And then I'll have like a stop. I'll chase it up with a stop just in case it starts to come back down. Then I can take the rest of it off, and I would have made some money. Or I could have said, okay, once it started coming up and I got in, I looked at it late, and I seen that this area was the top of this day, and then it was support for this day. Then I'll look to short it or buy puts up here so that if it goes down, I'll make money on the way coming down. And if it comes up past this and holds, then I'll get out for the loss, for a small loss. But if it comes down, then I'll look for it to come down. And I would have looked for it to come down and hit the 200-day moving average and took some profits and then held the rest, hoping or thinking thinking maybe it could come down and retest support. If it doesn't, then okay, I took profits and I can hold. So that's how you use support and resistance to try to trade off of. But in the daily, usually in the morning when I come in, like say this previous day, this was Friday. So Friday morning, I'll get up and I'll say what I'm going to use as my area to trade off of. And I'll look at these light colored, or the way that you see how they look, muted color candles. They're like that because they're during hours that the market's closed, and the only people trading is like the computer algorithms and people who have access to trade those hours. You can actually trade at 8 a.m. on some platforms, depending on what broker you go through. But you can't trade options, which is what I trade at those hours. So usually I come in and I'll mark up from after 8. You see 8 o'clock down here, the time frames. After 8, I look for whatever's the high. I'll mark it up, and I'll use that as a way to trade off of. And then I'll mark up the low, which is actually right here. This candle that's already right here. So the way I would have traded off of it is, since it's already right here, and if it starts to push up, I might grab a starter call. Then if it starts to, but once it gets up here, I might buy one call or two calls depending on how many calls I want to buy for the day. I'll do a starter amount though. If it gets up here, take some profits off. Once it breaks and this candle comes down test and it closes, then I'll definitely see what the next candle does because it's so close to the 5-minute mark. If it starts to push up, I would have bought more calls because that's kind of a confirmation for me to get in and add to my position if I'm going to add, just to bring my average up a little bit. But I can use this as a way to get in short. If it popped up fast, I would have got bought puts right here, looking for it to come down and retest the pre-market lows and take some of my position off and hold the rest to see if it can continue down for continuation. But it would have went wrong, would have went against me because I would have bought the puts. It would have came up, broke over this. I would have waited before still to see if I wanted to buy calls because that was a confirmation candle, but it instantly continued down. So my puts would have been adding in the money from here because I would have bought them from here. But once it came up and broke through again and closed over it, I would have been looking for an area to buy calls in. So once this pushed up, came down and held, and started pushing up, more than likely I would have got in. This is hindsight trading, but this is the way I would have looked at it if I was trading. So I would have been looking for it to come all the way up here, even though it took all day. I wouldn't have got out off of this because for me, when I trade, I don't look to get out unless it breaks like an area, or a lot of times I look for a RTZ. That's how I risk it till zero. So I don't buy like money that I'm not looking forward to losing. A lot of the times my trades are the amount I trade is the amount I'm willing to lose. So I don't really buy a lot of shares or a lot of contracts. So anyways, that's the way you use support and resistance during the daily, or how I mark out my charts. And I can use this as an area because it came down, bounced in this area, and that's hindsight, looking at it from today. I could mark up this area because this was some support, and once it did break through it and it came back and it tested it right here. So that can be some support that I can have on my chart for Monday, in which I will leave it on here as some support. And I can remove this line because my previous day is going to be up here once the market 8 o'clock in the morning tomorrow. It's Sunday. So that's how I use support and resistance. And that is what support and resistance is. I usually start off on my weeklies. Then I go and do my high-low candle from the previous week. Then I go to my daily. I do my high-low candle for the previous day, and then I go in and I look for areas close to wherever the stock is at the moment, and I look for support and resistance from the daily. And then I go into my intraday and I do my pre-market highs, pre-market lows, and I look for support and resistance from the past few days. And that's how I get my support and resistance. That's what support and resistance is. When a stock goes up, bumps its head, rejects off of an area, continues up, old support resistance becomes new support, so that once it comes back down, a lot of the times it'll test it and bounce off of it, like this bounced off of the same purple line that this one hit his head on. And it'll do it multiple times. This one, this area, it tested off of it before this big giant candle washed through it. So that's what I had for today. What is support and resistance? If you all have any questions, you can leave them down in the comments. Leave a thumbs up. And don't forget to subscribe if you are not already subscribed. See you all tomorrow for my recap. Later.
Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along and see it's true.